Think back to the 2008 crisis. The cascade of bank failures started with Bear Stearns and Lehman Brothers. It all began in the US and spread throughout the planet. Now it is a part of history. As a fun fact, former Lehman Brothers employees are about to gather to celebrate the 10th anniversary of their mother company's bankruptcy. How will the next crisis look step by step? Where will it start? When will it start? What impact will it have? And how will the world look after the event? One belief is that the next crisis will begin and develop in emerging markets, and then as late as 2021, it will only slightly hit the United States. Regarding how it will play out, Cezary Graf notes that Trump and Federal Reserve policy will lead to economic downturns around the world. In 2018, this will include Iran, Turkey, Venezuela, and Argentina. In 2019, it will reach India, Pakistan, Brazil, and Mexico. By 2020, China, Japan, Southeast Asia, Russia, and the EU will stumble. Lastly, in 2021, the United States, Canada, Australia, and Switzerland will be next. However, in 2022, the United States will be the best shape of the major countries. The crisis has already started. The Turkish lira is plunging, the Argentinian central bank has increased interest rates to the cosmic level of 60%, and Iranian inflation is skyrocketing.
Turkey, its currency plunging to record lows against many other world currencies, the lira losing a third of its value this year alone. Stock market also in absolute free fall. Right now, the Turkey ETF is down 42% just this year.
Argentina's central bank has raised interest rates to 60%, up from 45%, as the country's currency continues to plummet in value.
The official inflation rate in Iran is 10.2%, but today I measure the annual inflation at 193%. That's quite a bit higher than the official rate.
However, these are minor players. The crucial years will be 2019 and 2020, when the deadly cocktail will be served for India, Pakistan, China, Japan, and the European Union, among others. In 2020, the United States will also be hit. However, the magnitude will be significantly limited, in contrast to what many are currently saying.
But that isn't going to be sustainable.
But you have unemployment below 4%. And again, there's been an acceleration in economic growth. There's been an acceleration in job creation this year. I looked at the numbers.
There's 1 quarter.
No, the job market, the 7-month average this year is 215,000 jobs. Last year was 184,000 for the first 7 months of the year.
Okay.
Because I think this is going to be a dollar crisis. This is going to be a sovereign debt crisis.
We're in the last days of this financial system in the U.S. This is Zimbabwe.
And I'm pretty sure that this time it's going to be stocks, real estate, and bonds.
Can you just let me and my people enjoy the growth while it's happening?
You have a few months, okay?
Okay, I'll say it's more than a few months, but I'm not going to argue.
Cezary Graf's point of view is as follows. In 2022, after the next financial crisis, the United States will be in the best shape of all major countries. I'm ready to take bets. You must be aware that every subsequent, even small recession in the Eurozone will cause an implosion of the sovereign debts of European countries. In consequence, this political bloc will be dismantled. A recession is also very dangerous for Japan's tremendous pile of debt, which is only sustained by the Bank of Japan's monetary mad game. China, on the other hand, has become very dependent on GDP growth at a level of 6 to 9%, and a slowdown below this level will be associated with significant turbulence. When the dust around the world finally settles, America can emerge in relatively good shape. From a conservative point of view, the US currency and bond supply are perhaps still too high, and rates may still be too low. However, despite its peculiarity, the dollar and US debts are the most popular US exports. During the next 2 years, when major emerging markets will be struck by various crises, we will have massive capital flows into the US. This will include the dollar itself, the US bond market, US stock market, and US real estate. The US will be recognized as a relatively healthy jurisdiction with attractive interest rates. The Fed's balance sheet will be recognized as relatively normalized with a potential for quantitative easing. There will also be a basic monetary tool in the hands of the Fed, which will be to lower rates in response to the possible slowdown. In fact, this looks to be skillfully conducted by the Fed and Donald Trump as a financial war on the rest of the world. They will start to wage it now because if they do not, then in 10 years China and its allies will be too powerful to defeat. It is very naive to expect that after the 2000 dot-com bubble burst and 2008-2009 meltdown, that the third one will again start in the US. Despite all political and ideological issues, the correct understanding of this matter will have a tremendous effect on investment portfolios as well as casual life decisions. It's just a matter of your money. Two major trends can be expected. 1. A massive human migration crisis. Emerging market country citizens will be displaced because of economic reasons. And yet again, the US under the Trump administration will manage it relatively well.
You look at what's happening in Europe, you look at what's happening in other places, we can't allow that to happen to the United States, not on my watch.
2. A massive chunk of the capital pulled out of emerging markets will be channeled to the most robust cryptocurrencies. The devaluation of EM currencies, the dismantling of the SWIFT system, and the pursuit of new investment solutions by private, corporate, and public parties will be the main causes of this great money migration. Cezary Graf states that the value of cryptocurrencies will rise substantially from mid-2018 levels, thus making potential returns from other capital allocations much less attractive. Ignoring this is the manifestation of a deep misunderstanding of where the world is now and where it is going. This will be the first crisis with the crypto option on the table.
What's going to happen is one of these intrepid, pension funds, Texas Teachers, State of Wisconsin, the Canadian pensions, somebody who's a market leader is going to say, you know what? We got custody, we got Goldman trading it, the story I believe, Bloomberg's involved, they've got an index I can track my performance against, and they're gonna buy. And all of a sudden, the second guy buys, and then you hit the tipping point. In the same FOMO that you saw in retail, because people are gonna be like, it is real technology, and they are gonna try to disrupt almost every industry.
In post-meltdown era, it should be assumed that taxation of tangible things such as real estate in many parts of the world will increase. It should also be assumed that the US will follow the path of isolation within both the American continents and NAFTA. Venezuela, as a result of possible coup d'etat, will fall under the US sphere of influence. I fully understand that many people are fed up with what is happening in the US, both socially and politically, as well as how the media's picture of politics has become idiotic. However, from an investment point of view, the US and cryptocurrencies will be winning games in the crumbling world. It is a matter of your money. Visit this video in 4 years, in 2022. Thank you for watching Cezary Graf, Crypto Poland.